All right, guys, I just entered this trade. I don't know if I don't know if you see this, like my stop loss is very tight, just because that is where I'll be risking about $200. So I don't literally like it, the fact that, I want my stop loss to be all the way down here. So this is not the right execution following structure. I want my stop loss to be below this level. I'll be happy, but the fact that my stop loss is here, that's the only thing I'm not happy. And if I was to lose this trade, because it takes me out on my stop loss, and then the trade goes to my favor, because I know eventually, right? Look at it, 1 hour time frame, guys. 1 hour time frame just bounced off this beautiful resistance level that becomes support. So now it's acting as support. Our 50 moving average has also been rejected. Big two bullish, bearish engulfing candle, but that rejection is good, so it means it's being rejected. And then we see two green candles, and then now this bullish candle formed. So I just want to be in the right side of the market. I know it may look like, okay, this may be like a double tops or whatever. Now market has just made also like a new, actually market we can say market now is bearish. So I don't even know what I'm buying here, to be honest. If I look at it that way, right, there are many ways that you can look at the market, but I prefer to buy because in the higher time frame, guess what, we have this triangular pattern. We broke above, we come back to retest this beautiful level also here of resistance, right? So now we just have to manage our risks. If we are wrong, we lost $200. If we are right, we win $400. Let's just see how that happens. Let's go to the 15-minute time frame. Moving average is right. Timing is really important though. I would have bought it right, just right above as it became. I prefer to do this right by here. So right now I feel like the market has already moved. I feel like I'm chasing it. So if I see like a little bit of profit, I'm just gonna close this trade, or maybe I can even close it at a small loss like this. It will be better, because I don't think I'm in the right side of the market timing wise, especially after. So it could be something impulsive, because I did not plan this trade too much. I was thinking that I'll come back the next day to trade. So maybe, and also the momentum is nothing like any session, right? The market is, we can say the market is close. Maybe this Asian session, but we'll see if the market broke below this low here. But no, the market has to broke below this low, so we never know. This rejection is showing us that we want to continue down, but also there's a support, there's a resistance level here, so market might just test it again, one more time, and then maybe I can close at that small profit, because look, my 50 moving average is also here. So I don't want to rush things, or just allow it to play out. And if it kicks me out, fine. I will not move the stop loss. I know people can move the stop loss here just because they think, oh, structure. But if the market is gonna lose, then now you're just gonna lose more, bigger than, you see. So we don't have anything else. We have taken the trade. Maybe it was an impulse trade. We'll just wait and see. Because the structure is still bullish. Is our stop loss that is making us just being scared of. I don't like to be in this position, by the way. I don't like to be in a position where my stop loss is very tight like this, because I can still lose. It can take my stop loss, but then my direction is still correct. So I don't like it, but we'll see. If we are going to lose this one, we are going to learn from the lesson. That's why we document this. If I lose this trade, I'm going to learn from this lesson. But if I win, maybe it can bring more bad behaviors to continue to do it. I don't know. But I don't want to just enter trade impulsively. I wasn't I wasn't planning to trade. See other one, this 1 hour kind of close. The market is coming for our stop loss. Hey, hey. Negative. Hey, nah. Ah, Papa God. Yes. That was a wrong entry, by the way. Although the market is still bullish, my stop loss was just at the wrong place, to be honest. That's why I did not want it to enter that trade. This stop loss that hit like this should be all the way down here. But I put mine here because I have to, no matter what, risk only $200. And anytime I see sideways movement, I just know that under here, that's it. Market is coming all the way back here. This is now, if I wanted to buy, I should be buying at this level, because maybe it can reject the 50 moving average a little bit. Maybe that's just you risking, right? Putting your place on yourself in a good position, and then stop loss below here. So you want to always respect your structure also. And then now you say, okay, let it come back up here. Or because since the higher time frame was bullish, you know that look is going to continue back way more. Now you're in a position where you're in a good position. We live and we learn. First of all, I'm not supposed to be trading this time, so it's just basically forcing a trade, I believe so. Yep, that is exactly what beginner traders do, bro. You see what market has done, right? If you respect your levels, you see how easy the trade can be. If I had just, because if I had just said, okay, you know what, let me actually respect this, market would have still kicked me out. Then my stop loss was too tight. Now we have learned that lesson and we are going to move on from that. This is the right place to put our stop loss over here. I think that's the reason why sometimes most traders also lose money, because their stop loss is too tight. Give the market room to breathe. The market is in an uptrend. Nothing has changed. Nothing changed. The market has been an uptrend. I entered well, but my stop loss was just too tight. And now the market has just pulled back a little bit. And now the market is enjoying this uptrend move to the upside. Oh my goodness. So now what I will learn from that is that since this was the last place that the market was going to come, I would have entered with how do you call that, with a limit order, right? Like a buy limit here, or somewhere close here that is going to be just $200 risks, because at the end of the day, $200 risk can still be here. And then if the market plays out in a sense that plays out without taking us in, then let's just lose the money. You understand? Let's just not being in a trade is also good, right? Because the market doesn't play out as we want in my favor. I want the market to play out in my favor, and I have to respect the market. So this is a lesson that I'm learning, and I want to document this. I have to respect the market too if I want it to respect me. I cannot put my stop loss anywhere and enter anywhere and expect the market to just like do what I command. The market doesn't care. The market is always neutral. The market, we are the one predicting the market to change at this time, because the market is always changing. So let's just respect it and respect our money, because losing here, the market did not tell me that it wants to go down. Look, the market did not break any lows. The market did not break any structure. This was the previous low that created these highs. And me to take a trade and put my stop loss here is very bad. I remember that's why they say, this is why they say we always learn by experience, right? In trading, you will learn by the experience. And this is me learning from my experience. It's simple. The market is bullish. It just created new highs. I don't need to scale in or zoom out or change time frames, right? I don't need to do that. Look at the market. You can tell that the market has just created new highs. And guess what? That means this is our previous higher low. If the market broke here, this is where your stop loss want to be. So I am just giving myself a lesson today that this is the last time I should be entering a trade and not following the market structure, because direction of the market is key. You can enter anywhere here, yes, but if you don't obey the market structure, you will suffer. I don't mind entering because I was saying that, oh, let me enter there, but now my stop loss is too wide. But then I would have changed it. I wouldn't have entered the trade then, because you did not respect market structure. So you are bound to lose that trade. You rather put your stop loss here and the market kick you out here, and then you will say, okay, I'm happy. If the market weak you, kicks you out, then goes back to your direction, say, okay, that's a good loss. But you putting your stop loss where it doesn't make sense, it really does not make sense to take that trade. For example, right now, if you want to take a trade, I don't care if we're in a higher time frame, what the higher time frame is saying, if we're in a resistance level, blah blah blah. I know that currently the market current trend right now is bullish. What do I want to do? This is our last place to put our stop loss, these lows here, right? Why these lows? Because we can even enter here, it doesn't matter, but now we are going to find a way to enter here, right? So we can get what we can gain the most. We can gain the most of what we can, and then our take profit can be up here or maybe even further, because this market right now, this is our trading range. The market can do whatever it wants here. It can even create triple tops, come back here, play around, as long as it doesn't broke this level. It can continue back to the upside like this. That is overall bullish structure. Same thing it did here. From here, market create a high, it played around. This is a pullback because this low has not been broken. This is our previous most recent higher low. So let's just trade with the trend, try to follow the trend as much as possible. So when we are right about the direction, we are also right about where we have to put our stop loss placement. It's so important. It's so important. With that being said, we live and we learn, right? That is one loss for the team. Now it's like when I play football, when I play soccer, all the goals can come by just some funny mistakes. Maybe the defender failed to clear the ball, he wants to dribble from the back, or he wants to do some funny stuff. The more times you limit the mistakes, the more profitable you become. The more time you limit the mistake, the more profitable you become. I don't document, but I can say creating this video is like a documentation. I'm just looking at market right now. It's literally obeying structure and just pushing to the upside. And I am like, damn, we live and we learn, right? So next time I'm coming into the market, one thing that I'm also going to say I did well today is I keep the stop loss, the risks, right? $200 limited. So tomorrow we are coming in, maybe we can go for $400 so we can recover this loss plus one more, right? So we can take a good risk to reward trade and we'll follow the market. And if we lost $200 tomorrow, fine. But we want to make sure that we are following structure and we are also risking the right amount. Today I risked the right amount, although I did not follow structure. Tomorrow let's follow structure and let's risk the right amount. That's all we can do. Allow the market to play out, and then we make some money, we make some bread. Peace.